Hello, it's me again. I'm Chris. I'm attempting to invest in 100 crowdfunding projects, £1,000 at a time. Now, the reality is I probably won't do 100 because most of them probably don't meet my little investment criteria. But what I'm really trying to do is understand whether crowdfunding is a viable venture investment method, but also I really want to help founders who are putting their stuff on to things like Crowdcube and Seeders and whatever else, understand when confidence could be won or lost in a crowdfunding campaign. What are the things that turn a professionally minded investor off? Because traditionally and typically, most professional investors kind of ignore crowdfunding. And should they? I don't know. We're about to find out. This is me in my big face, so let's make that smaller. There we are. Okay, I think this is video 10, 9, 10, I don't know. Anyway, we're still on Crowdcube until we get to 11. Let's go! I avoid food and drink brands typically, by the way, for investment things, because I need to love it. I need to taste it, I need to drink it, I need to do whatever, and if I don't love it, I just simply can't invest. And because I can't taste or evaluate the product itself via this method, then I'm going to avoid all things like that, just so you know. So let's browse opportunities. Don't go by popularity. It's not a competition. Go by newest. I'm only doing UK. Early access really annoys me. Here's one. VREntertainment. Ooh, 106% of its target. Now, you're going to get a little tough cookie with me because I spent 6 years helping music and tech companies scale. So, found all the pitfalls. Okay, so here we are. So, VREntertainment. VREntertainment is the exclusive UK and Ireland franchisee for Sandbox VR, an award-winning location-based virtual reality company. We proudly operate Sandbox VR venues. I don't understand that model. I've never heard of a franchisee of a VR. Interesting. They'll need to explain that in their deck somehow for me to really get behind it. These are my little checklists down here in the bottom left, by the way. This is my crowdfunding professional investor checklist. There are a couple more things I look for when I write bigger checks, but this is crowdfunding. Don't be too precious. Okay, so I want to understand what that model is like, because is the IP contained within the parent company, or is the IP contained within the franchisee? And the reason that's important is because the exit value of technology companies is defined by two primary metrics. The first is, its revenue, how much money can it pull into its parent business if it gets bought? And it's not really about the profit so much, because the parent business will have its own methods for managing that money, including team, overhead, and all that stuff. And the second thing is how competitive and significant is the intellectual property? Can they use it to create more products? Can they expand their product line? Does it solve an internal problem, for their business? I'm just going to press pause because I can see the video skipping. Hopefully that's okay. Is it? Yeah, that was fine. It was fine. Anyway, sorry about that. Because I don't like to edit anything. Everything has to be like as it is. This is a stream of consciousness shit. This is. Anyway, so the IP is important because you build more stuff from it, basically. And if they don't own that IP, all they own is basically the relationship to the customer, then the only metric of acquisition is going to be this net profit, not its revenue, because then it does require including its overheads and whatever else. So that's something I'm going to need to know. Okay, so £10 million pre-money valuation for a franchise. EIS. How can it be EIS if it's a franchise? Unless I've misunderstood what they're saying, is that they own Sandbox VR and they franchise it out. Let's see if that's the case. Forms part of a wider round in which the company has secured 435,000 of which has been reflected. Okay, so they've raised under 100K on Crowdcube, and that's okay. That's okay, but it's a little misleading. Okay, 160,000 guests visited both venues. So there are 2 digital venues. 6.9 million in total sales and operating profit to date. I mean, that's really fucking impressive. 1.9 million pounds in operating profit. Pretty cool. Still, okay, so what's the problem? In today's fast-paced world, we believe the traditional ways of having a good time just don't do the trick anymore. Bollocks. Absolute bollocks. There's not a problem in having fun. There is a problem of this kind of product satisfying people's happiness. Don't confuse those things. They're not the same thing. Just because somebody is bored doesn't mean they've been waiting for your product. Frustrating, but anyway. People are looking for more involved and immersive experiences. Are they? Prove it. This leaves a big gap in how friends and family get together and hang out. Okay, I'm going to go on a little bit of a soapbox here because this is an area of my actual psychology research at the moment. These aren't the problems. The problems are the absence of physical human connection. When 2 humans are in the same physical space, your depth perception in your eye starts to be able to read facial expressions properly. And that triggers hormonal reactions in your body, oxytocin and serotonin, which then form bonding experiences, which therefore reduce depression, reduce cortisol, reduce insulin, all those kinds of things. And it can only happen in person because of the depth perception in your eye. Now, when you try and replicate those experiences online, yes, you can have fun. Of course you can. But there are certain aspects of the human bonding experience which simply cannot be replicated digitally, at least not yet. And so these statements, frankly, show the ignorance of this problem. Now, it annoys me because of my position. It doesn't annoy me because they're saying, anything that they shouldn't say. It's just, come on, dig a little deeper. Anyway, as Sandbox VR has built what we believe to be one of the world's most advanced location-based virtual reality experiences, we grasp the opportunity to become the exclusive franchise in the UK. Okay, so they basically own the rights to using Sandbox VR in the UK. Fully immersive, free roam technology and opening 2 venues in London and Birmingham. Okay, so maybe they are actually the mixed reality. It's not all headset. Okay. But still, they're a franchisee. They don't own Sandbox VR's tech. Okay, they want to open more venues. Okay, that's cool. All right, I'm going to have a look at the investor deck. Let's do this. I never watch videos, by the way, because they're just designed to make hype, and who gives a fuck about hype? Boring. I'm not going to read an executive summary. Boring. The future of entertainment, it's not really, it's just a form of entertainment. All this leverages, this is all valued, stuff around Sandbox VR. Since our launch in July 2020, we have welcomed over 150,000 guests into our venues. 4 million in sales. What? 4 million in sales. But 6.5 million sales. Why does your deck say 4 million and this says 6.5 million? 1.2 million. Is this an old deck? But it's May 24. I mean, maybe you've done £2.5 million. Oh, wait a second. Was that dollars or pounds? Sorry, I missed that. Let me just check. No, it's pounds. All right. These kinds of discrepancies really reduce trust from a professional investor's point of view. Venues trading, customer acquisition cost. I mean, you're a marketing business, basically. You're not a technology business. You're a marketing business because it's not your technology. You're not designing or developing your technology. You are an events and marketing company. Events marketing companies typically exit at multiples of anywhere between 3 to 5 net profit. That's pretty classic. So I need to know what their net profit's going to be going forward. There's nothing in here. Okay, you're not Sandbox VR. You're a franchise. Do they have any rights to the IP value of Sandbox VR if they're building the UK business for Sandbox VR? If they are, then that's really, really good. Okay, franchise. This is going to be the important bit, the franchise agreement. VREntertainment has exclusive rights to own and operate Sandbox VR venues. It's to open 30 venues and expand further. Okay, bird and bird, totally fine. It doesn't really matter to an investor, if I'm honest. They pay $30,000 per site. The royalty, content, and development fees are redacted. Okay, so I don't know how to form an opinion then. Exclusivity period through... I appreciate some of this might be sensitive, so I understand why they would redact that. Protection beyond exclusivity periods, 10 years from venue launch with option to extend an additional 10 years for a total cost of... I mean, that's totally fine. So they basically got a 20-year agreement, so good for them. There's nothing in there about ownership of any IP. Okay, so that immediately... is there a novel invention? No. There just isn't. There just isn't. This isn't... You have to want to invest in an events and marketing company. Does it work, change behavior? Yes. Can the founders build the first product themselves? I guess so. If they're a marketing company. No, if they're a tech company. Let's do that 10x in a minute. You see, because I might change my mind on the novel invention. Will I chat about it at dinner table? Probably. It sounds pretty fun cool. The team, I mean, they've already demonstrated their ability to generate revenue, which is the only thing this company is really about. Okay, so let's have a look then. So let's just say they're going to exit. If I was going to exit this business from a venture point of view, which means sell the business to somebody else, sell the franchise, then it's going to be at the renewal point of that exclusivity agreement. So it's going to be around 2030, isn't it? So they're saying their sales, £75 million, operating profit 42, their EBITDA of 26. So I think they could sell the franchise for maybe 50 to 60 million pounds if they're successful. So let's have a look. So they could expected venture value. Oh no, sorry, acquisition. Let's say 60 million pounds. I'm not expecting a lot of dilution. If they can raise money through revenue, then they might do one more round, one significant round for marketing purposes, and then I would imagine the rest would be debt, which is fine. So I imagine there's going to be about 30% dilution. Let's just be conservative. They are offering... let's go back to here. This is a really interesting one, but my instincts aren't hopeful. But I'm going to reserve judgment. Target raise is 500k. Their valuation is 10 money pre, so it's 10, 5, because you add the money onto it. My investment, 1,000. It claims EIS. I am struggling to believe that, but let's just say yes. So I'm essentially risking £700, not £1,000. So my equity is 0.0091%, which is fine. So I expect at some kind of acquisition point to be 0.00636. Long story short, can I 10x my money? The answer is no. And no, I'm not going to change my opinion about if there's a novel invention. Oh, this is an interesting one. Okay, so would I invest in a professional venture investor invest? Should they? In my opinion, no. They will not return enough money. But second reason why a venture investor should not invest is that there's no IP. Now, I've explained why that's important. Where there could be value in investing is if you have a private equity mindset. So the private equity thesis is very different to the venture capital thesis. The venture capital thesis basically says, I get my money, I get my win when the company gets acquired. And so I value my ROI and my targets are all based upon that significant event. Whereas a private equity mindset is, I intend to hold on to this for a significant period of time. And this business, if it is essentially printing profit, is a very good private equity opportunity, actually. And I question their traction in revenue because of the inconsistencies between their pitch and what's presented on here. But I do know Crowdcube, do some diligence to make sure some of these numbers aren't bullshit. So I have a little bit more faith than if this was just blindly sent to me on an email. So if you are of a private equity mindset, this might be interesting actually, but I'm a venture mindset. Doesn't fit my thesis, so no, I will not invest. Take care.